Don Kaufman here, September 16th, 2020, doing the TheoTrade evening video, minutes to go to the cash close. Once again, the Nasdaq, specifically the monsters of tech, under some big sell-side activity. The Nasdaq actually facing almost a 2% down day. That's precisely what we were looking for, of course, on the Monday evening video. Let's actually get to work. Let's not only talk about, in past tense, but what we can actually expect in the next couple of days. Again, there is some fierce sell side going on right now into this cash close, which is just moments away. As days like this, where, that evening bell just cannot come soon enough. So as I was saying, the monsters of tech right now are taking big heat. And if you've never heard that terminology, well, that's because it's very specific to here at TheoTrade, what we term the monsters of tech. This is a conglomerate symbol. There's no options in it. It's a conglomerate symbol. And this is a symbol that I have constructed. And I'll actually take you into it a little bit here. For the most part, it is the monsters of tech. It's Apple, Amazon, Facebook, Google, Microsoft. So we're actually doing a compilation symbol on a ratio basis. Now that ratio is based on, we equate each of the stocks as if they were trading at $1,000. They're not market cap weighted, none of the above. All we're basically doing is accumulating these stocks to create our own index product. And you can see the monsters of tech are actually leading some of the sell side activity, down about 2.3%. When we start to look at this kind of individually here, the products, Microsoft is actually faring a little bit better. Apple under a little bit of duress, almost down some 3%. We jumped to Facebook down 3%. Amazon's under some pressure. Google, kind of the outperformer in here. But people, those, collectively are effectively your monsters of tech, which, again, are seeing some sell-side activity. Now, to remind everybody, we were actually talking, expressly on Monday night's video about looking for more sell side. And I'm actually going to take you into this on a 30-day 1 hour. Again, a 30-day 1 hour. I'm going to zoom in and explain precisely what I was looking for, what we've got, and where we're going to actually head with this. So on Monday, we were talking about the opportunity to look after a short position. But we said, wait through Tuesday, let the bid kind of continue. That is, let the buy side activity continue. It did that. We progressed all the way back up to almost 11,000, close to 550. And here we are once again, right back under pressure, as we were saying earlier, with the Nasdaq futures down to 11,240. All right, what I would actually consider at this point in time, first and foremost, move away from what you actually think the Nasdaq is going to do. Let's actually look around the marketplace for a second. To make a decision, about the forward future, of an individual product like the Nasdaq or looking something like Microsoft, you cannot be myopic in doing so. One of the first things that you have to understand about this marketplace is we lost, our correlation coefficient. We completely lost it. Now, this is something that we had over the weekend. We had it last week when the sell side activity was getting just downright hideous last week, right? You had full-blown correlation. One of the things, that you have to be able to back away from, you can't just look at these, these futures, and there is the closing bell, but you cannot just look at these futures and try to discern, this is what the marketplace is going to do. One of the first things you got to do, I like to look at the S&P 100 advanced decline line. Why? Well, first and foremost, it's 50-50 over here. This kind of damage can be done to a market with a 50-50 advanced decline line. I mean, you take a look at the financials. The financials are actually outperforming. Those things are up by 1%. Energy sector, it's up by 4%. The reason that I'm denoting that right off the bat, all right, I'm talking about the S&P futures being down, almost 20 handles. The advanced decline line 50-50. Two fairly large sectors are up, and up substantially. How could it possibly be that the S&Ps are down almost 20 handles? Because what you're not getting is you're not seeing, because it's not totally transparent unless, again, you kind of read through some of the products out there, read through some of the sectors. the weakness inside of the Nasdaq is considerably worse. And it's one of the reasons that I wanted to highlight that and kind of, talk a little bit about the monsters of tech. It's not just the monsters of tech. It's not just Apple. It's not just Amazon. Okay. It's through and through. The Nasdaq is actually in fairly substantial trouble, given the fact that it's only down, 1.9%. I mean, listen, what you've actually done, right, is drag down the S&P futures, kicking and screaming. I mean, the things are down only, 0.5%, which is negligible. I know it looks big and scary. Okay, it wasn't the Fed and Fed speak that actually drove the marketplace down. I mean, Fed speak, if anything, okay, actually helped the financials today. All right, if anything, all right, it helped the energy sector, which was just exploding. The Fed didn't do much of anything today. I think they came out, they saw their shadows, 6 more weeks of winter, yada, yada, yada. All right, push it aside. What I wanted to get into over here, though, is again, with the S&Ps down 20, you really got to think to yourself, all right, what if you start to see correlation coefficients jump again, okay? S&Ps wouldn't be down 20. Right now, the S&Ps would be down 60. They would be down 80. They could be down 100 handles easily. So one of the things you have to look at is, okay, go beyond the Nasdaq here. Go beyond what you think, again, the Nasdaq is going to do. Maybe you think there's going to be some continued sell-side activity. Not even concerned at that point. What I'm concerned with is this. The risk, okay, is most definitively right now to the downside. All right? And the risk is to the downside simply because we're not seeing things like high degrees of correlation. Sure, everybody says, well, we could just jump right back up tomorrow. I'm not arguing that at all. I'm not arguing the fact that, the S&Ps could bid back up. Good news could come out, right? All news is good news with Gary Gnews. Listen, anything can happen out there. But the risk here, when you look at this tape and you look at the advanced decline line and you look at things like volatility, okay, this does not bode well. It doesn't bode well at all. Because if the Nasdaq continues sell-side activity, what's going to occur is it's actually going to tip other products like the financials into sell-side. Okay? And when it does so, and again, when it does so, and we'll actually pull up the financials here, this is a marketplace that you could actually see the financials getting dragged down towards the end of the trading session. It had nothing to do with the financials and everything to do with the fact that the Nasdaq was getting hit because arbitrage was actually kicking in and starting to cause correlation to come into play. The biggest risk that you're going to assume right now in the marketplace has got to be to the downside. So tomorrow, you can't be surprised if the Nasdaq is down, 200-300 tomorrow. That's when the S&Ps are going to kick in and start to sell, and we're going to correlate again. Now, let's actually back away from that for just a second. Let's go look at the SPX. Halfway through this week, why are we looking at the SPX? We almost tagged the upper edge of the SPX expected move. Now, the expected move this particular week, right? You're roughly plus 100, okay, or minus 100. Literally, the expected move was $99 and I believe 75 cents. It's about $100. So you're looking for this $100 move to the upside, $100 move to the downside. One of the things that gets a little bit intimidating, okay, at a point in time like this is here we are. We see some sell-side activity. Again, the volatility, it didn't play a role. Now, don't be worried about the fact that volatility didn't play a role. Volatility didn't play a role simply because, what? The financials were higher and energy was higher. So the volatility, it's not all that serious. Volatility will immediately play a role, though, if we start to see degrees of correlation. What's scary about this, okay, is simply the amount of room that we have to move for the remainder of the week. Coming to Thursday, coming to Friday, again, there is huge room to tag the upper or lower side of the expected move. But once again, I have to reiterate, if the market flipped around and rallied a little bit, sure, the S&Ps could be up 20, okay? They could be up 25, 30 tomorrow, just clawing back what they basically lost today. That's easy, okay? But the big time risk and for the largest move is going to be the downside right now. And I have to reiterate that again and again, because if this advanced decline line, okay, starts to see, again, higher degrees of correlation, like 90 stocks trading on one side of it, forget about the Nasdaq. It's the S&Ps that are going to be in really definitive trouble. That's what you really kind of want to look for inside of the next 24 to 48 hours of trade, okay? You shouldn't be surprised to tag in any given week the upper or lower edge of the expected move. But there is an absolutely enormous range to the lower edge of that expected move. Okay, to get really specific, you're looking at like 32.40, right? We're trading right now, what, 33.85. This would be more than a hop, skip, and a jump to the downside. Be careful out there right now. Again, I am actually carrying long Russell position, short Nasdaq. Again, I am long Russell, short Nasdaq, which played out magnificently in today's trading session. I mean, literally, we couldn't have been positioned any better for this. However, inside of the next 24 to 48 hours of trade, one of the decisions I'm going to look at is I may actually even bail out of the Russell. Okay, bail out of my long position in the Russell. Why? I saw the Russell starting to fade late in the day with the remainder of the marketplace. Hence, I believe we are going to see greater degrees of correlation come into play. Listen, keep your hands and feet inside of the vehicle at all times. We're about to get volatile once again. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.